Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, January the 26th, the year's 2021. Let's talk trading. Everything with Walmal. Yesterday, I was speaking on the phone with a trader, and we had a long conversation. And I made the comment that, in trading, you can do everything right. You can, write your trading plan down, follow it to the letter, and you can lose. On any particular trade, you can make an entry and lose. On the other hand, you could just randomly enter a trade and win. You could do everything against your trading plan and win when you enter any one particular trade. So I don't think there's almost anything else in life that's true in. We're dealing with speculation. The outcome is not based on what you do, hardly at all. The outcome's based on outside forces that are outside of your control. And that's why I always say, whenever you win, you got lucky. The market gave you a chance to take profit, and you acted, and you took the profit. It's that simple. Walmart, what do you think?
Yeah, you're absolutely right. We are talking about speculation here, and it's one of those things that you can do everything right, and the market still goes against you. You can do everything wrong, and the market should smile on you. That's just the reality of trading. And I think I was telling you earlier, what my first trade of the day. When I placed the trade, I placed the actual trade. I put it into two actual trades, and the reason why I did that was so that I could scale one of them. In other words, take the profit I wanted on it and scale the second trade. And what happened was I went in, took the trade. Okay, the first trade went in, and it went and took a profit and made a couple $100 on it. And the other trade, at the same time, I went and scaled that. I went and actually hit the close all button because I wanted out of all of my trades. At that moment in time, because I just didn't like what the market was doing. It didn't look very like it was going to go in my direction, although I was up. And so I was a little bit worried about the trade. So I hit the close all button. Closed the first trade, and like I said, got a couple $100. Second trade I closed and actually lost more than I gained on the first trade. That just shows you that in a flash of an eye. I mean, if you look at the closing times on my trades, there was only 1 second difference between the two, and the difference was, a couple of pips because it just flashed that quickly. I didn't do anything wrong, and yet, instead of having two nice, trades because they would have both been profit, I had one nice trade and one terrible trade. But at the same time, I did everything right, and that's just what the market does sometimes.
Yeah, it was funny. They also asked me a question because I was explaining how, a lot of these guys out there, they have these seminars that you can pay, $500 or $5,000 to go to, and they give you this big, thick notebook. They use all these terms that you have no clue with, and at the end of the session, you go home with this big, thick notebook thinking, if I could just learn this stuff, I'm going to make money, in the market. And, meanwhile, across the hall, if I was holding a seminar, I'd hand you one sheet of paper that all you need to know about trading. I'd put up a chart, draw 2 lines, and go, if it hits this line, price moves up to this line, you go long, price moves down to that line, you go short. And any questions? And so then people go, oh man, you're a ripoff, you're a scam, I want my money back. But the funny thing is that this is what we do every day, like the Walmal method, using the sweet spots indicator, and that's just how it is. So she was going, well, why do you have all these indicators if all you need is that? I go, well, the thing about the indicators is that for mainly we're running statistics. So we're looking for where's the best place to put those horizontal lines? Where's the best place to take the trade? And we're always looking, can we do a little bit better? Can we do just a little bit better? And then of course there's a point of no return, and that's when we hold each other and check. You go, hey, you're getting too cute.
You're exactly right. And the thing is, you think about the Walmal method. What are we doing? We're just using the sweet spot lines and putting lines, every 10 pips. And but by drawing a line and saying, okay, we're going to cross that line, that's not statistically based. But what is statistically based is if we're going to start doing this, looking at this in the very beginning of the hour, when we've gotten zero movement on the hour, and we've gone back and we looked at the statistics for an hour, let's say you're trading the pound dollar like I am. Yeah, I know that, for instance, on the 9 o'clock hour or the 8 o'clock hour Eastern time, I know that on average, okay, and when I go and look at the, where we are, percentile, looking at the percentiles, 80% of the time, 90% of the time, it's going to go and move more than 25 pips. Well, if I got a line every 10 pips, that means I'm going to come out of both ends of that thing, potentially, or more, or another possibility is I only come out of one end, and I come out big. Therefore, statistically, I know that it will work, especially if I go and say, okay, if I'm going to go and, let's say I'm going to go and look to go and break a 20 line, coming close to the 20 line right now, and I'm looking to do a break of the 20. If I put my stop loss down, at the 10 line, well, potentially I can lose 10 pips there, worst case scenario. But statistically this was the beginning of the hour, I know statistically I've got 20 or 30 pips that I can move. Sure, I could break out of the bottom end, but reality is, let's say it goes above that 20 line by 2 or 3 pips, okay, turns around and goes all the way back down to my stop loss. Well, first of all, you probably should have gotten out earlier than the 10 pips anyway, but then it crosses the bottom of that. Well, there's a very, very high probability that when it goes and breaks that 10, it's going to go down and visit the double O. And you may not get all 10 pips back, but you'll get a good number of it. And we know that because that happens all day long during the London and New York session. Well, I'm going to, some hours I may actually not have enough. I may not cover enough, but in totality for the day, I will. And that's the thing. I'm looking to go and make 10 pips per day, so it'll work out in the end, and that's what I know. And that's all based on this whole idea of statistics, and that's why it works.
That's exactly why it works, and that's why I say, all those other methods out there, you don't see other people give you statistics, and our statistics are basically, price movement, because price moves. You have an open price, a high price, a low price, and a closed price, and so you take the statistics based on those numbers. And so for example, we look at high minus low. That's the range. We look at high minus open. So if you're trading away from the open, that'll give you an idea how many pips you could have possibly made, just like open to low. Once again, trading from open. Then we look at high to close and close down to low. So if you're trading away from the high and away from the low, that's how many pips you can make on those ranges. And then you can also, of course, do open to close, just to see, or close minus open to see how far, price closed above or below the open for that particular candle or bar. And then based on statistics, like right now we can see we have a daily range of 110. Well, that's only at the 45 percentile. So there's chance maybe price will move past there. We also know for the hour, it's 14 pips this hour. That's only at the 38 percentile. Before, it was at the hour before, 26 pips or 86 percentile, and 30 pips, 90 percentile. And what we mean by percentile, and just in case there's a new trader that doesn't understand the terminology, let's say you take the ranges over the last 160 hours is what we do. 24 hours in a day. So we're looking at the last 160. Now, what does that give us? Well, if you wrote each one down and then you sorted it, then you look at where does that one fall within that range. So we sorted all of these out, and so like at 14 pips, that means there's 38% or 38% of those ranges fall below 14. And so conversely, 62 are above the 14. And it's basically, it's a simple simple thing, you know, it'd be kind of hard to do by hand. And that's why I write indicators to do it, because the computer can do it in the blink of an eye.
But that's exactly right. You know, and having that knowledge, because that's what that is knowledge. And knowledge is powerful, because now when you have that knowledge, now you can take advantage of it and use that for your, you know, for your benefit. Now, does it work every time? No, because, you know, using one of the examples you had before, 62% of the time it did do it, and, you know, and then 38% of the time it didn't. So that means, you know, there's a good chance that you could lose 30, you know, 30, if you would do this time and time again, you know, and if the statistics held true going into the future, that would mean you'd lose 38 times, but you would also win 62 times. So, you know, that's kind of how you have.
Well, no, that's not really on this case.
That's true. Yeah,
it doesn't. That's not what we're doing. What we're saying is that if you were to take it, this is saying right here, 14 pips is the range for this hour. Well, you know that the lines are separated by 10 pips. Worst case scenario, you could have made 4 pips this hour. Let's take away a pip for spread and a pip for commission. So you would have made 2 pips when price broke either the high, either either Walmal line for this hour. Which in this case, let's see, do I have the Walmal lines on this chart? Yeah, it would either be, it breaks either 3700 or 3710. Well, it broke the 3710 line. Okay, and it broke it by almost 10 pips, 9 at the moment. So that's a winner. So it's only when this number here, if this number was 9, well, chances are you wouldn't have you may not have broken it. But let's see, where did price open this hour? Let me take a quick peek. Price opened at 07. So you were 3 pips away from the 10 line. So you know that price is normally going to be, at this stage of the day, it's going to be 13 pips or more. Or at this case, 13 pips or more at least 62% of the time, based on the last 160 hours. And you realize some of those hours are during the Asian session, where the range is definitely compressed. And that's why we also look at it, the range for each hour of the day. And that's why we trade certain hours and then we take a rest the other hours.
Exactly right. You know, and that's, you know, this would be a really good example of why you would want to take that Walmal trade this hour, because, you know, you are close enough, you know, where, you know, if you cross that line, there's a good chance that you're going to pick up some pips, you know, relatively easily. You know, so that's why you take that. To me, that's a high percentage trade. And then, if again, part of it is, you know, we do have to look left, and if you look left on the chart, you know, there's really not much that you're going to run into at that level. You know, you see that you topped out, you know, somewhere around 23, 24, something like that. But, you know, that's 23 pips away. I'm only looking to make 10 pips for the entire day. So I had a good chance that I could go and grab some of those pips. It'd be really nice to grab some of those pips.
We just put in a new 3-ball there too on the M1.
Right. And so, what does that mean when we put in a 3-ball?
Well, what that means is that price is now making a new high over at least the last 34 bars, is what it means. And it means it's breaking out, not reversing. Because even though we use this to reverse off of, when it first appears, it's breaking out. So that's why the semaphore indicator, I made the modification. It says it's you got a 3-ball. It's telling you to short the next bar, not this bar, but the next bar. So you let this bar close, which is going to close in about 7 seconds here, and we're into the last 30 seconds of the video, and you can see here price is reversing. So, but now we've got the new bar, and so we would look to go short if we wanted to take a short. So, fellow traders, remember, you know, you can do everything right and lose. You can do everything wrong and win. But it's better to do things right, because if you have the statistics on your side, you're going to come out a winner. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.